What is going on, everybody? I am your host, Jonah, on this fine Thursday afternoon. And we are going to do our Ask Us Anything coaching hour, where we take your questions and comments and concerns and we talk about them and we answer them. And joining us here, we got so many folks. Why don't we give the floor to one of our coaches, Jesse, at the moment, who is on bottom of the screen, just so he can introduce himself. And Jesse, if you wouldn't mind, tell us a little bit about what we're doing in the hour, what our topic is, that sort of thing, so that people know.
Yeah, my name's Jesse Durham. I'm from North Carolina, married, 3 kids. And what we do is we teach people how to save and spend money at the same time. So we teach people about this concept of infinite banking that comes from this book called Becoming Your Own Banker by R. Nelson Nash. So we answer questions, share best practices, speed up people's learning curves. We directly work with people all across the country to save and spend money at the same time.
I love it. I love it. Thank you, Jesse. Just like Jesse said, my name is Jonah. We are going to be joined here by the other half of the Banking Bros, Jeremiah. And this is what we do. We teach people what infinite banking is, how to use it, how to help people, exactly what's going on in the finance space. So a lot of people tune into us because we give pretty general finance advice in some situations and circumstances. And we're also going to give very specific finance advice when it comes to the infinite banking concept. And that is what makes our channel really unique as we talk through and talk about what infinite banking is. So, Jeremiah, why don't you introduce yourself to everybody and say hello?
Ladies and gentlemen, good morning. Most of you are on some sort of East or Western time zone compared to us, but it is noon here at the headquarters at the Cash Compound. 10 years ago, somebody told me the truth about where I could save my money, keep my money, KEEP, put PUT without investing it. That's a way longer word, a little bit risky. And now that my money is there, it's always guaranteed to grow and cash flow for my family forever. So that's what we're here to do, and maybe entertain you along the path as well. So Jonah, what movie reference did I just hit with that one?
Entertain you along the path as well? Is that what you're saying?
No,
I have
Forever.
I know that.
That was your favorite movie.
Is it The Sandlot?
Yes,
Okay.
for like 5 years growing up.
What I know when people talk about Forever now, they talk about there's a Kanye West song. Forever, ever, forever, ever.
Well, I would even go Chris Brown with
Forever.
Yes.
Ever. I love it. Hey, Elda, hello. Thanks for joining us. We really appreciate you, ma'am. And we're excited that you're here. So here's what you should do if you are tuning in for the very first time. You should leave us a comment on your specific platform. We are live right now on TikTok. We are live on Instagram. We are live on YouTube. We are live on Facebook. And so if you are watching, you should leave us a comment and say at least hello. But we'd like to know where you're tuning in from.
Where you?
Exactly are you? So Elda said hi. B-Rad says, yo, what's up?
Denver.
Navigate Your Ventures says hello from Denver.
YouTube. So we have 3 YouTubes there. We can see a little icon next to you guys. So
yeah.
On YouTube, we are the Banking Bros. If you're not on YouTube and you want to find us there, we have a lot of long form content. And Jonah, yesterday I was doing a cash consultation, absolutely free. I'm wondering, is your calendar open this week?
My calendar is open.
Okay. I was doing one.
Not all the times are booked.
Right.
Yep.
I was doing one yesterday. The guy was in New York State, and he was had been watching us, a New York police officer. Can't tell you anymore because I got to protect the wealthy. But he was watching YouTube, long form content there, saw us, clicked the link, and said, look, I need to walk and talk through doing this process for myself. How do I do it? I got a daughter. I'm trying to get my retirement right. I'm trying to pay off bills. Can I do that with this process? And we walked and talked through it. And he was like, look, I think I'm going to learn on the way, but I'm ready to go. Let's go ahead and get this paperwork going.
I love that. So we
So-
got Denver in the building. That was Navigate Your Ventures. We got Kansas in the building, and that is BRAD. So we really appreciate you guys. So here's what we're going to do for the next hour. One is we're going to answer and field your questions. It does not bother us what your questions are, so please ask them. Anything in the finance space, specifically infinite banking, we're going to have some answers for you. We're going to know one or two things about the infinite banking space because we've been practicing infinite banking for such a long time. So if that's you, just ask your questions and we're going to answer them. The second thing we're going to do is we're just going to walk you through some of the new and practical things that we've been doing with our infinite banking policies here recently. So I think that'll be a little fun, and that's our intention for the hour. So here's what's fun. Yesterday, I actually was on a call where someone was talking about some private lending opportunities that they actually had. And so I've actually got a new idea for private lending.
All right.
And I think I might be doing that here shortly with a bunch of my cash value. So it'll be kind of fun.
Hold on.
I'm ready.
Like, so somebody called. I'm just trying to make sure I'm the first to know with everybody.
I've got the information. I'm going to share it I'm going to share it with everybody who's interested in knowing.
Okay, so let me give you guys an overview of what he's talking about. Cash value is a money amount that your policy is worth today. Your whole life insurance policy, the platform and product we're doing this system from, is going to pay out at death.
Yep,
of course. But there is an equity value that you can put in your pocket today. You can borrow against the money that the insurance company owes you, and then you can go be a banker with it, which would mean maybe loan it out to somebody and get it back with interest.
Yep.
You now have an investment system that you control that always gets bigger, that's income tax free to take that money. And Jonah's going to tell us what to put it in. What's going on?
Yeah, so it was a person that's actually going to be a little bit more involved with our organization, so that way everyone can have some of these offerings. So this young lady is actually by the name of Tracy Bell. You've talked to Tracy.
Okay, good.
So
where this is coming from.
So this is fun. She's going to put something together for us to have like on our podcast, so people can know and how to contact.
Great,
It'll be great. But anyway, she actually just got in this deal. And so she sent me the contact information. The gentleman who's running the deal actually emailed me before the end of the day yesterday. It happened. It was like, it's going fast.
Oh, they're ready.
But here's what's happening. There's a company, a production. Production's not it. There's a builder that just got a contract to build a Ritz-Carlton.
It's construction, not production.
That's what I said. Yeah, construction.
All right.
To build a Ritz-Carlton in St. Kitts.
Yes. Okay. I remember them saying it was coming.
It's coming.
Like a year ago.
Right.
Or something.
So I got all sorts of links and contract signed, and here's the venue, and here's what it'll look like, and we're gonna do all this fun stuff.
Do we get
And so
VIP status?
See, that's the only thing
Ritz.
I wanted to know.
Correct. I don't care about the return if I got a spot
That's what I want to know. I'll figure it out.
in the penthouse.
I'll figure it out. But that is that's what we got.
So let me say a shout out here to TikTok right now. We've got our Banking Bros TikTok up. So if you're in TikTok, put a 1 in the chat. I don't know if anybody has yet commented. If you like, love, or learn something on this cash coaching hour, give us a heart wherever you are. We've got a camera here, but we're multi-streaming here on several platforms. So welcome to the show, to our cash compounders or our Banking Bros audience on TikTok. Thank you for being here. What we teach here is code cracking cash flow. We want to have a conversation with you right now. And we've got Jesse, one of our coaches in the game here from the Cash Compound, to talk about maybe some opportunities that he's holding out on me. I only let my brother hold out for about 12 hours before I have to know. Jesse, have you used your policies for private money deals as well?
Yes, we have.
Okay.
We've kept it mostly in our family so far. So we've had enough happening in our extended family to keep us busy so far.
Okay, now your extended family is 300 people, so that's understandable. First off, there's so many of you guys, but a lot of people out here who are joining, just like me, are like, wait, I'm not loaning to my family. That's how I get burnt. So Jesse, walk us through utilizing your policy, which I'll get to the mechanics again. I'll just refresh everybody who's new here is just joining. In your infinite banking type system, which is going to be platformed in the product of whole life insurance, there is liquid cash you can get to. You can borrow against your policy's value. That'd be death benefit, right? All these hundreds of thousands or maybe millions of dollars. You can borrow against it with net present value, cash value, money in your pocket, and you can use it as a bank. Now, a bank would be lending money that's not theirs, OPM. If you know what that means, put it in the chat, friends. OPM. They take OPM, they lend it out to maybe Jesse's family members, and then they get it back with interest. Jesse, tell us how you navigate that type of conversation, though, with your family. Like, for what? What am I lending people money for?
Yeah, well, it could be whatever makes sense for everybody, right? And it's always interesting to see where people are at on their feelings or philosophy around that. Like, I heard one of the sharks from Shark Tank, it was Cuban or O'Leary recently talking about, they wouldn't do loans, but they would gift money on the condition that they'd only do it one time, never to be repeated again. That's not my philosophy. My philosophy is I want to keep as much money in our family as possible. So if I got a brother who does business over here, or if I got somebody that wants to make a purchase over there and they're in my circle and we have a great connection, we have a great relationship, and we're all clear on, well, what do we want that interest to be like? What do we want those terms to be like? And we can maintain that control and that profitability, because there's no question that banking is profitable. Look at the banks, right? Your streets, our streets, these banks are doing great. If we can keep that control and profitability in the family, I want to be able to do that. So the lending could be for a big purchase that somebody's wanting to make. It could be for paying off debts that they currently have with financial institutions, and we could bring that in-house. It could be for growing and expanding a family business. Okay. It could be for investing. It could be for all sorts of things.
I love it. Jesse, so I want to ask practically here, when I would talk to you or Jonah, I want to ask practically, what does that look like on paper? When you lend somebody something, are you getting it in a written agreement?
Yeah.
Okay, help us understand that.
Yeah, so I'll answer that one first. Anytime that I'm doing any sort of private lending, again, this is really important, everybody. I only really am going to do private lending with the cash value that's built inside of my infinite banking policy. If I've got a bunch of income that I made, right, tax time's coming.
Yeah.
There's a big population out there that's about to get a refund check, right? Or have already gotten it because you could have filed already, that sort of thing. But if I get that, that's not the money that I'm using for private lending. So let's be clear on that. That money is going into a policy first, and then I'm going to use the policy cash values to do the private lending. But I'm only going to do private lending if I've got collateral in the deal. So I don't like to do private lending. I have done these deals before in the past where I do not have collateral in the deal.
Okay, you're getting heated right now. Tell us what's up.
It's stressful.
Okay.
So I'm only going to do deals moving forward where I've got collateral in the deal, meaning I want to be first lien position on the mortgage, right? I want at the closing table of this property sale, I want the mortgage company, the attorney, to have to pay me my check. Does that make sense? I don't like to personally do the opportunity where someone says, hey, would you be interested in loaning me $5,000 or $10,000 for this? I don't like them. I don't want to do those at all. I know some people don't mind them, but I don't like them. I don't like that. So moving forward, you better believe I'm getting paperwork. So that depending on what your deal is for, it depends on how much paperwork is done. But yeah, absolutely, there's going to be lots of paperwork involved in that process.
Okay, so ladies and gentlemen, we want you to know that we are creating a community. We have an Infinite Bankers Facebook group. You can find it right now by just typing it in your search bar. So go to FB and type in Infinite Bankers. We got a couple of questions for you, and then we want you to join our community. And some people in our community are learning how to do exactly what Jonah is excited about down at the Ritz.
That's right.
St. Kitts. And even as we speak, we got a couple of guys who are prepping to come to the office tonight and actually do a deal.
Okay.
We've got a client coming to see me this evening. He's local to where we are in South Carolina. Remember, we'll help you all over the country. Okay. Oh, I got a new one, because it used to be, it will help you if you're down here with Uncle Joe, or up here with Justin Trudeau.
Yeah, but we got a new president and they got a new prime minister.
Yes. So it's, Oh, hold on. I forgot what my new rhyme was. I had one. Hey, give me a second, guys. Give me a second. But
Uh-oh.
anyway, if you're interested in the private money lending space, you want to be able to be the bank for somebody's deal, whether it's in St. Kitts or maybe it's Jesse's family. I think there was a wedding he mentioned that was he helped finance. There was probably cars. Those are easy in your family, right?
Yeah.
You can do cars.
I
do
found some
student loans.
I heard some
potentially.
statistics recently
Yeah.
about cars. I had heard them before, but I hadn't taken it to heart, I guess. So here are the statistics I heard. The average American purchases 13 cars in their lifetime.
Okay.
And it totals $500,000, which, if you do the math, is about $38,000 per car.
Okay, that makes sense.
Which tracked for me.
Yep.
And the average person
right.
goes through 13. So when I heard that information, I counted how many cars I was at.
You're already at 9, first off.
No, I'm not at 9. I got to recount because I don't remember. I think I'm at 5 or something. I think personally I'm at 5. Now, if I combine me and my spouse, we're way more than 5, right?
Yeah.
I think she's got 5 since I've known her.
I've seen her car. She needed 5.
She did need 5. Anyway, so I think I'm at 4 or 5. I have to go back and count. But I literally thought that
now,
through,
how old are
and
you? How old are you?
I'm 32, folks.
Okay, it's 32, and you've had 5 so far.
Yep.
You started, when was your first car?
15.
15. So that's 15, 16, 17 years. So you're at 3 years a car.
Right.
Okay, got it.
Which is, it seems
extreme.
Yeah, seems.
But I probably
then
also
I'm
saw
thinking-
your cars
But
too.
then I'm thinking through the cars, and I'm like, no, I think this tracks. You know what I mean?
Okay.
So anyway, it was really eye-opening for me because I went, oh my goodness, I literally have 8 more or 9 more cars to go through before life is over. Again, then my spouse has got just as many. Then I've got children that are going to grow up. My oldest is 7. I'm 8 years away from he needs a car,
right?
And then am I making them share, that sort of thing? I got 3 kids.
For sure.
Probably I
take
am
your
for
sister
a little
to school.
bit.
Take your sister
for a
to
little
school.
bit I am, but then I got to get a new one, and I'm realizing how much money that we generally, the average American, is going to give up to the banking system.
Yeah. Now let me jump in
financing
and
that
say
stuff.
that, ladies and gentlemen, what we're talking about here is there's only 2 ways to buy cars. Okay, you can actually lease them, which is like a rental. But when we're talking about cars, we mean things generally. You either pay interest or you lose it. Now, that losing it is the one where I did not understand. Okay, I'm a cash buyer. I don't go ahead and get car loans. I bought my first 5 cars off of friends, right? So I didn't have a loan for that. But you either pay interest to the financing of your car, the dealership, the bank, whoever, or you lose interest. That was one that got me because I paid cash. Most of us do not realize, one, because Wells Fargo, City Chase, TD, PNC are giving us 0.1% interest. We don't realize we're losing interest when we pay cash. And we are going to lose interest because the dollars that we put into that car dealership are no longer working for us.
Yep.
There's another way. That's what we teach here. We call it the save and spend system, where you can save and spend money at the exact same time. Jesse, my question for you is, how many cars have you gone through so far, and did you finance any of them by paying someone else interest, or did you finance them by cash and you lost interest? Let me know.
Yeah, so I made both of the mistakes. So I'll turn 40 in a couple of months, and I've gone through 5. I had to count that up real quick. So that's interesting statistics, Jonah. And I'll tell you what jumps out at me, like that $500,000 that the average American is going to lose on cars. Here's the next level to that. What could you do to grow and compound $500,000 of your lifetime instead of just keeping? I mean, if you just kept another $500,000, incredible, right?
Incredible.
But what
That's
if you
a lot of money.
compounded that? Game over.
I love it.
Yeah, so I've paid cash and I've financed both.
Okay. Jonah, what is your favorite car so far?
The current one is a good one. The current one, not because of what type of car it is, that's fun too, but really because of the financial position I was in when I purchased it.
Okay.
And that's a big deal. I've been in dire straits before. I've bought, I kid you not, I think I've gone to a dealership's website before and sorted the cars available
hold on.
by lowest price to highest price.
He said, I think this has happened before.
No,
and then he gives
definitely
us
happened
super
before.
specific, like it's happened.
Sort the cars from lowest price to highest price, and then I bought the lowest priced one. Like I drove over there and bought that one. I've done this before.
100%.
So
Put it in the chat if you have been in dire straits with a car. I'll tell you a car story as well. Jonah, keep going. But shout out to everybody out there. Marie, afternoon. Good to hear and see from you on our YouTube channel at the Banking Bros.
That's
but
right.
go back into it. Okay, so you're buying cars.
We got a couple other shout outs too here, though. Navigate Your Ventures and Shane both knew your answer to OPM, right?
Yes, other people's
both knew
money.
the answer to OPM. Belial just said one.
First person in
Billy?
the chat.
Billy?
Yeah, it's probably Billy.
Billy.
So
Sorry, sorry.
he was trying to be first in the chat.
I got you. Hey,
Yeah.
tell us where you're from. That would be awesome for us. We like to hear that.
Everybody, where are you IG and TikTok and YouTube and in from? I'm in Greenville, South Carolina with my brother here at our HQ. Our studio is where we broadcast people, but we help people all over. I can't remember our new rhyme. Dang it. I'll think of it.
Oh, this is crazy because I'm writing the cars down right now. I'm at 6, Jesse. I've had 6 cars up to this point. One of them I'm not sure counts because I got it for a summer.
It counts.
It
You had
does
to.
count?
Did you have to finance it? Did you have to spend money
I
on it,
did.
or did you potentially lose money?
I did.
Then it
I
counts.
paid cash for it.
Was your name on the
And-
tax tag and
And then
title?
yeah, it was the summer of
It's yours.
2020, and I got this Jeep. Remember
Yeah.
the Jeep?
Oh,
It
yeah.
was fun. And then I
Was
sold
fun.
it before the year ended.
All right,
But that
Charlotte
makes
in
me
the
at
building.
6.
Hey, Marie, appreciate you being here. We want you to know that we do live in-person training and coaching. It's really Infinite Banking 101. We call it the Save and Spend System, and we hope that you make it down for our next date, live and in living color. Okay? Marie's had 6 cars
Marie's had
so
6, yeah.
far. I want you to drive the 6th one down to see us on April 12th. Is it April 12th?
It's April 12th. Yeah.
Okay, Marie,
So-
if you don't know about that, go to hit us. Okay, wonderful. Yeah, we want to invite you. We want to save you a spot. Go ahead and DM us or whatever you got to do.
So Marie's
we'll help
actually in underwriting currently.
Oh,
She's
okay,
getting
great.
started. So Marie, here's what you should do. If you wouldn't mind, just shoot me a text, please, and I'll save you your spot. I'll send you the confirmations and things so we can see you in person. It'll be fun. With that being said, we got a question over from Instagram. Shadow King 999_72 says, one, he's from Tulsa, Oklahoma, and he wants actually us to reach out to him
Okay.
because he's been trying. He says he wants to collaborate. He's been trying to do business with us for months. He says, I didn't realize that, Shadow King.
Shadow
fault.
King. Okay. Well, you were shadow banned, so I didn't see it either. But we have a great overview and podcast about what happens when money stays inside your community or it exits. And we talked about those infamous race riots in Tulsa,
We did.
1921. So go back a couple of hits in our YouTube. So go to our YouTube channel, The Banking Bros, and over there, find the podcast. It's he and I sitting at the table right here, and we have a great spot that talks about infinite banking, the save and spend system, and your town.
Yep.
Okay.
Perfect. Okay. And then Shadow King, would you just send us a DM on Instagram? You're on Instagram. And then we'll, after we get done here, we'll come back to you and we'll try to have a conversation with you, man. Or lady. Shadow King, though? Probably, dude. King, right?
You never know these days.
Well, I'm just saying. Shadow
Never
King.
know these days.
Okay, anyway, let's keep moving here. So I want to do something fun. We posed this question to our Facebook group recently. So I think it's going to give us a little bit of some infinite banking insights. So let's jump into that section here. The question that we posed, we said, would you rather, either or, right? Would you rather have $50,000 in equity tied up in the house? So you got to go get a HELOC or a home equity line. I mean, there's
Whoa.
line of credit or there's
I believe you're extrapolating from this question already.
50,000 in equity tied up in the house. How else do you get money out of the house?
Nobody said get money out.
Oh, okay. Would you rather have $50,000 tied up in the house or $50,000 in cash value accessible for you?
Okay, so it's a good. I posed it in our Facebook group. We have a private group. We'd love to invite you to be there. If you're just joining us, it's called Infinite Bankers. I asked that question and I gave 2 answers. It was a poll, right?
Yeah,
it was
a
one of the
poll.
first times I've done a poll, but you're good at polls. Okay, so I put either or. Which one would you have? Now, here's the reason One of them clearly had more votes.
Yep.
Clearly.
Yep.
But here's the reason I want to talk about the one that lost. The one that lost, ladies and gentlemen, was equity in the house. $50,000 equity in the house was a paltry experience compared to someone has liquid cash values in their policy. Jesse, can you give I think you voted. You tell us your vote and why you chose that. And then I'm going to try to defend the one that many people out there are trying to figure out. Why would I want cash value? What is that? I would like to pay off my house.
Mhm.
Which one did you vote for, Jesse?
Yeah, I definitely voted for cash value. And my thinking behind that was multifaceted. So we often refer to cash value as similar to equity in a home, but the conditions, the terms, the access is very different. So when you have a whole life policy, it's a private contract with the insurance company, and it has a constantly, perpetually growing, compounding cash value to it. So that means for the rest of my life, on all of the policies that I own several, I'm going to have a greater and a greater access to capital, guaranteed in a tax-free environment, private, easy to manage, no asking permission to get that access. So, and I could go on. There are several reasons why I feel that it's superior, but I voted for cash value.
Okay. Jesse says cash value. And I want to defend the common man out there who
Okay.
would love to pay off their house.
Okay.
I
Well,
just
$50,000 in the house is not paid off normally.
this is a small house.
No.
No. Okay.
Still no.
All right, these days. Okay, I just got off. The reason I'm bringing this up, and I wanted to help everybody who's just beginning to understand what's going on. What are these guys talking about? I just got off a cash coaching call. We do one-on-one cash consultations. They're absolutely free for people who are piqued in interest about what we're talking about.
Yep.
And this lady that I was just speaking to this morning, it is now 12:30 East Coast time. I had a call with her at 10:30 this morning. She wants to pay off the house. That means that the entire value of the house would be equity.
Sure.
She wants to pay off the house.
Yep.
And so I think that most people would like to pay off the house because it is a bill to them and their money is gone. They actually don't plan to leverage the equity in that house.
Nope. They just want the bill gone.
They just want the bill gone.
Yep.
Okay, so I'm going to give her that, and I'll give that to you as well. But ladies and gentlemen, let me pose a question to you. Would you, let's say that your house payment is $1,000. There are plenty of people out there with a mortgage that are less than that still because they've had it for a while, or potentially up to $2,000, depending on what your house is like and where you live, right? $1,000 bill every month, rain or shine, 30 years. You just keep on paying that. That's a lot of money.
It is.
Okay. My question for you is, would you still pay that bill if you were leveraging the equity at the same time? You've got a bunch of $50,000. You've got $50,000, $100,000, $150,000 of equity in your home. You leverage it. Go get a HELOC.
Yep.
You go give it off to somebody as an investment. You're going to pay the $1,000 over and over and over for the rest of your life. But what if there was $1,200 coming in cash money in your pocket because you leverage the equity? What if there was $2,000 coming in? Would you pay a bill of $1,000 to have $2,000 coming in every month, rain or shine?
I would, especially if the 2,000 that's coming in or the equity that's coming back to me, the cash flow that's coming back to me is dependable and collateralized and safe. Then of course I would, right? It gets a little tricky if the deal I did out there, I don't know if at any moment this thing's going to fall under.
Doge coin to the
Right.
moon.
Then that gets a little tricky.
Right.
But if it's dependable and I've got paperwork on it and I'm collateralized and it's consistent, then of course I would, right?
Let me
Of course I
ask a
would.
question for you and Jesse here, and a shout out to YouTube faithful. Nelson is in the building. Nelson, appreciate you being around, man. I think Nelson's in Texas, and he is faithful about joining us in the afternoon on his lunch break
Sure is.
or wherever he is out there. Nelson, we see you, my friend, and thanks for being back. Jesse, you first, and then Jonah. I'm going to ask you this question. Jonah has mentioned something that I'm assuming you're going to take the same position on. I don't know if you will, but his position is he wants his loan, his private loan from his system that can go out to somebody for a real estate deal, an investment deal, something like that, is going to be collateralized. He keeps saying that. So what I might say for everyone who doesn't understand big words, which was me when I started this journey, is that there is something of value behind his offer, his investment.
Yep.
Something behind it. So if something goes wrong or backward, Jonah may take ownership of that piece of property, that value. There's something behind it. And he's not going to give a personal loan to somebody who's just trying to, hey, sharks, I'm here for $100,000 trying to get my life right this summer.
Right.
Like, that's what you don't want to do.
And 20%. Yeah, I'm not doing that.
Okay. So here's my question for you, and then I'll come back to Jonah. I'll give him a chance to think about it. But as you age, both of you have young children. You guys have children in the 7, 10 years old range. Those loans that you might need to give your kid so they don't have to pay interest to a third party or lose their cash. Are you willing? When and how are you going to do this system and expand it for your family? Because there's not going to be collateralization behind your kid's car purchase.
Yeah.
So, Jesse, how are you navigating that as you lead your family? I know you have 3 children, 2 boys, and I know they're adventurous. They know what's going on here. Help the average person who's listening to us today to understand. Well, private loans to family members around weddings or car purchases or lawnmowers that they want to use for their summer job. I'm not sure if I can count that as, a value collateral value. I don't want a lawnmower if they
don't pay. Yeah.
Well, how would you navigate that question? Then Jonah, same question. I want to know here, because both of you are probably, I don't know. Are you already doing loans with your family like that?
Cool. So 2 things. One is I love what Jonah said about having something in writing always, because that just means there's no miscommunication, because you've sat down, they've sat down, you've talked through it, and the contract, the paperwork, it just says what you've agreed upon. So there can't be miscommunication if you actually take the time to write it down. And I have done private lending just on a promissory note. We've got clear terms. And I'd like to speak to terms real quick, give one bar that I've tried to set within our family, which is 10%. So I try to set what, is an advantageous and yet a reasonable percentage within our family, whether borrowing or lending, for all parties concerned, because there's that natural tendency to maybe be asked for the friends and family rate, right? No, we're here to be profitable, all of us together, not onerous, but advantageous for everybody. And the terms, I would say, is the great thing within family, because they're what we set, not somebody else. And so if we can be profitable and if we can control terms in the family, it's going to be great. But I love what he said about communicating it, having it in writing, and yes, on collateral as well. And there's nothing wrong with having the lawnmower as collateral, because again, it just brings everybody on the same page to the sincerity of banking as a business, even when it's in the family. Because if you were doing conventional lending, there would be collateral. So we should just do what banks are doing, but keep the control, keep the profitability in-house. But still, collateral, communication, paperwork, oh yeah, all that stuff. And then a high bar. I like 10%. You don't have to do 10%, but figure out what you do want to do.
Jesse, I love that answer. You've thought that through well. Jonah, same question. What are we doing for family loans and your kids who need capital to get in the game when they're 12 and 16 and 18?
Yeah, I think kids are a little different because you get the opportunity to teach the kids the entire way through, right? So again, my oldest is 7 years old, which means he has no real job. I'll put that in quotes, whatever you want that to mean. And so if we talk about what the typical,
could have sworn he was a vice president of a company.
Yeah. But if we put that in the typical, work environment, he's going to probably start working at 15, 16. And that means that's also when you start working, because you need this income and because you want to spend the income on whatever you're spending the income on. So if that's when I now get the ability to do the in-house transactions with him instead of the third-party transactions, right? You got to assume these days everything keeps getting lower and lower as far as age requirements. I know driving's still around 15, 16, but having that first car is probably around that time too. So if I get this opportunity at that age, 8 years away, to have the conversation with him that we're going to finance it internally, I also get to set the terms when they're still easy to mold because they have not had the other experiences just yet. And so I think that kids make it a little different than a third party. If I'm going to loan money to my child, I'm probably going to use the lawnmower or the car or the whatever as collateral. I'm just going to, and I'm going to make, but they also live in my house, and I
know where you sleep.
Yeah. I also can drive them to work and make sure that they're earning the money in order to repay it. Right. So I think kids are a little different. I think kids, you can make some exceptions, but I mean, I also agree with Jesse. I'm not going to do it for no collateral. And I'm not going to do it if you're not signing off on the contract that you're actually going to repay it, and that you're going to be consistent, and you're going to treat this like an official loan. And I'm just not going to do that. So,
okay, ladies and gentlemen, there you have it. I love it. I have a question for everybody who's listening to us in the chat right now. What is the next step for you? What's on your mind? Problems or opportunity? I'll say problems or possibility. What is it for you? When we talk about infinite banking, the problem is debt. Yikes. Credit card. Just put that in the chat for us. Let us know. Possibility. Well, I have an opportunity to move, to get a new job. You know what I'm saying? If they say I relocate, they're not going to pay for it, but I can make double, triple the salary. What is the next step for you in your code cracking cash flow conversation? What is it? Is it a problem? Is it a possibility? We're here to help you understand that the save and spend system, our steps and our process, will influence this for the better. No matter what it is, we'd just like to know. Unfortunately, we had within our coaching community, we had some folks who were on the train with us for a while, but they have a great thriving business in Ohio. Okay. They just told me this morning, because I called them, you gave me a piece of paper.
Yep.
And these people have a meat market membership.
They do.
And they have been killing it.
Good.
Yeah. They've been killing it.
They sent some meat. It was pretty good.
Yes.
A couple summers ago.
Okay. So things are going really well.
Okay.
They've about tripled their membership since they said they last talked to us.
Nice.
Okay. So they were telling me that this morning. And but they also, part of the reason I think that we had certain paperwork on them, thought I should give them a check-in, is his father-in-law, her dad, passed away last month. Yeah, passed away. They walked in on him in a Gene Hackman situation where he was still alive, but things were not, unconscious, falling over. Yeah, not looking good. So they moved him in the house with them, and took him to the hospital. His kidneys are failing. Then they come back. It's great. Put him in a facility for a week. Gets COVID. Comes home again. Yeah, whatever. So it's been a dramatic month or whatever. And he passed. Sounded like last week or something. And so, obviously, ladies and gentlemen, when we're talking about utilizing the product as the platform for your financial wealth here, it is whole life insurance.
Yep.
So we are going to get to the place where it's time for us to go. It may be dramatic. It may not be so dramatic, but it'll be dramatic for everyone else no matter what, right? We're gone. We've moved on, hopefully to a better place. And everyone left behind is picking up pieces. They're stopping what they're doing. It is a code red, right? Nobody's going to work today. Everybody's going over to the house. There's 100 phone calls. All of a sudden, all the bad blood between your family members. Look, we got to get together. We got to figure things out. We got to clean up houses. We've got to travel to go get somewhere. All of that is always going to be a part of it. So remember, as much as we're talking about utilizing your whole life insurance policy for banking, for opportunities and possibilities, it's still there as a guaranteed payout, income tax free for your family, friends, church, your charities, all those people who are left behind.
Yep.
So a shout out to our friends out there. You know who you are if you're listening today. We love you. We know you're going through a bunch, and we're glad the business is going well, but we also understand that no matter what happens, we are solving a cash flow problem when the worst comes, when mom and dad or child or you pass away.
Yep. All right, we got a question from Carrie G. She says, when you have the whole life insurance and you borrow against it, they charge a fee or interest on it. Question. Is that taken out monthly until you pay it back, or is it a one-time fee on the amount you borrowed? How does that work?
It's a great question. Jesse, we'll pose it to you. We are talking about, if you can see the 3-cup setup here, when we put dollars in, they're called premium. It buys us a whole bunch of money. It's called a policy, a bunch of paperwork. And when we borrow against the equity value, I'm going to take some of that and say it's paid up, paid off, or paid for. Put it in cup number 2. It's cash value. So Carrie wants to know from our Facebook community, if we borrow, I know what that word means. That means it's a loan. That means I'm getting charged. There's a fee or something. Jesse, explain to us what's true, what's not true, what's a myth, what's a misconception, and how do we make it happen? What's going on?
Yeah, Carrie, thanks for the question. So first and foremost for me is the loan is an unstructured loan. That's what makes it superior in my mind, is the control to be able to pay that loan back when I want, how I want, if I want. Okay. We want to be honest bankers, which means we do want to pay it back, and we want to pay it back with interest. So we're looking to mimic what banks do. If you take a loan from a bank, they're going to control when you pay it back and what the interest rate is, and they're going to have that collateral that Jonah was talking about and all of that stuff. So all the terms and conditions, if they approve us, which is a big deal, is in the bank's favor. So we're going to do loans, but we're going to do loans from this insurance company where we are part owners of that company. So we get to decide, since this is an unstructured loan, am I going to make that monthly payment? Am I going to make a once a year repayment? Am I going to do something once a quarter? Am I not going to make a policy loan repayment this year because I'm paying off debt or I'm buying something, but in 2 years, that's when I'm going to do my repayment because I have this cash flow that frees up, and that's when, so you get to choose. So with it being an unstructured loan, that's what comes to the forefront for me, is all that control that we maintain. And of course, the insurance company is going to charge an interest rate, a bank would, and we want the insurance company to be profitable because of that 4th cup that Jadu can show you here in a second, of course, which is the dividends cup. When this company is profitable, they share those dividends with us because we're part owners of the company.
I love that. Okay, so hopefully you got your question answered, Carrie. We had a great member in our community also respond to that in Facebook, and Jesse gave it to us live right here. So yes, simple answer is the insurance company does not charge a fee, so it can't say fee, but they are going to levy an interest rate that they basically calculate on an annual basis, send you a sheet of paper, and said if you have outstanding loans, here's the rate. Here's the interest charge against the account you have with us. Remember, that account is this big old death benefit. We suggest you do pay it, like Jesse said. Become the banker, profit because of that, alongside the insurance company, and individually in your own policy. Things still get better. Carrie, there's only 2 ways to fund things out there in your life. It's either you lose interest by paying that cash, or you pay interest to someone else. Using your policy will keep that money with you growing and cash flowing.
Okay, I've got another comment. This is from a video that we posted on our YouTube channel where we talked about infinite banking, and we kind of put that up against treasury bonds.
Okay.
Now, treasury bonds are going to get a lot of shine here. Treasury, apparently,
I wasn't in this video, right?
No, you weren't in this
Okay.
video. Yep. Apparently, the sale of treasury bonds goes up 60% if a recession is announced. Treasury bonds spike.
Oh, really?
Which makes sense to me, because it's just like the infinite banking ideas attract more and more and more people as soon as a recession's announced, because everybody doesn't want to lose money.
Yeah.
So they go, oh my gosh, I just lost all this money. Let me
Right.
go put all my new money in places that don't lose any. And I'm like, yeah, that you should have done that from the beginning, but okay. Right. So apparently the sale of treasury bonds goes really through the roof when there's a recession on the horizon.
Okay.
A lot of people think there's a recession on the horizon. I don't know that for certain, so I'm not going to say one way or another.
Mm-hmm.
But we did a video and we had a comment, and this comment is from the Hollingsworth household. And they said that, ooh, I always forget that you're actually taxed on interest earned, unless, of course, it's earned in your policies. Thank you. And here's what's fun about that. I actually realized in some of my studies and learning yesterday, did you know that if you purchase gold or silver,
Okay.
real gold, real silver, hold it yourself or don't hold it yourself?
I
up to
already
you.
am telling you I don't know because I've never purchased.
Did
real
you know
gold or
that when
silver.
you go to sell gold or silver, it is not income tax. It is capital gains tax.
Oh,
when you sell gold or silver. I did not know this. Did you know this, Jesse? I had no
Who
idea.
sells? Who sells? Some of us may be buyers.
Well, so I get that too. So I've got a question. I mean, I want to ask the people who are watching here. We got a bunch of people watching on all the other on all the platforms, right? We're on Instagram, we're on Facebook, we're on YouTube, we're on TikTok. We got a bunch of platforms. So I want to ask the people out there about that because I'm interested in purchasing gold or silver. But then I got people like Jesse saying, no, you buy it, you hold it. But I'm going, I'm not trying to hold it forever. At some point, I sell it. Right,
you're trying to hold it until Elon bankrupts the whole system, and then you got something that is of real value.
Still sell it for the new currency.
No, it could be the currency. That's what I'm saying. If everything goes tanks, it is the currency.
Okay.
So there's intrinsic value there, and you can go to the Cayman Islands or Dubai, and we can live. You know what I'm saying? Now we can live.
I get so okay. So okay, that's what I wanted to know.
Okay,
so this gold
question,
strategy is just buy in.
Yeah,
cross
buy and hold. Buy and hold. In Jesse's case, we know
fingers.
how Jesse is. He ain't going to sell it. He's going to wait till it is literally the currency, and then he's going to use it.
But I don't have any.
YouTube?
Don't show up at my house.
Okay.
Okay.
If you're on YouTube out there, what do you think? We're getting more comments on YouTube than normal. Sorry to our friends on TikTok. If you're looking for us out there or you think you can toggle between, hey, I got Wi-Fi in my house, I'm going to go for a walk, get on TikTok. We are having trouble. We always have trouble with our TikTok simulcast. So sometimes we have to go solo on TikTok, and I am normally that one there. So I'll catch you on the Banking Bros TikTok anytime. But is anybody out there dealing in precious metals? What'd you know? I did not know capital gains was a part of the sale.
Eventually, that's what I'm saying. Eventually, you sell.
Don't if you believe in doomsday, which Jesse does. Because then you just trade it for food.
Believe in doomsday.
You don't sell it.
Trying to diversify
you use it as
your portfolio.
Okay, right.
And you're getting gold or silver.
Right.
Then I'm going to wait 10 or 20 years. The spot price right now on gold is $3,000 and some change.
An ounce.
That is way up because it used to be. I mean, 5 or 10 years ago, it was like 1,000 or maybe even 500. So this thing is moving.
Sure.
So you buy now, 2025. You hold this gold or silver for 10, 20, 30 years. We're going to cross our fingers that the spot price is 4,000, 5,000, 6,000.
Right.
Then you sell, right? That's what I'm asking.
As long as you have full faith and credit in the American government because it's still here, then yes.
Well,
then yes.
Okay.
Yes.
I'm just
trying to
figure it out.
I'm just trying to be ringmaster between you guys.
I'm trying to figure out what to do with some of the cash value. That's what I want to do.
It's a big question, and people do it lots of different ways. Some people buy and hold. Some people have physical gold. Some people do EFTs. So everybody should find their own way.
Yeah.
And everyone should realize that as soon as Elon picks that lock at Fort Knox, your plans are going to change. As soon as we realize down there's a bunch of IOUs, or that's where Jimmy Hoffa has been staying. Y'all too young for that one. Or whatever else might be down there. Jeffrey Epstein be living in a little apartment down there.
They said Fort Knox hasn't been audited since like 1930, something like that.
Mean, Hitler got that money and ran. He's found the fountain of youth. Hitler's still alive with all that money. 1930. A couple of questions on YouTube. Jonah, can you throw them up?
This might be for you. We've got Navigate Your Ventures said it seems to be all about the spread you earn on a loan on private money or recapture from credit card or outside loans. So actually I can talk about that one, but you've got one more from Navigate Your Ventures saying, do you leverage against the gold? Why don't you talk about the gold one first and I'll come back and talk about the private lending.
So do you leverage against anything? I'm not going to give advice there. People should decide what they want to do. You know, we're all about promoting people's independence, their autonomy. I think you should obviously play to your strengths, your experiences, your connections, your skills, your talents, etc. Right? And at the end of the day, the banking of whatever it is that you want to do. So it doesn't matter to me whether we're talking about business applications, investment applications, lifestyle applications. banking, like Jadu's been saying, takes place. All these things are financed. So I would just promote the idea that you control and profit over the financing of your business and investment and lifestyle. So you decide if you want to leverage gold or not.
Yeah, so
You can.
I'll say one more thing out there is because it rolls into the other question, I think, is we think that you should be a capitalist, to be honest. We don't say that very often, but we do think that you should invest in yourself. Jesse gave you a laundry list, your connections, your people, your interests, your likes, your get away from your dislikes, whatever. So most of the time we would suggest go find those things that are opportunities and interests to you. And yeah, use your growing assets to leverage and be a capitalist. Go find opportunity with them. But I mean, we can't tell you what to do, but our philosophy is going to be rooted in you actually doing stuff.
Yep.
Yeah.
Yep. So I'll answer this one a little bit more specifically also, navigate your ventures. For me, it's not really about spread. I mean, it's about spread a little, but it's really just more about cash flow. That's what it's about for me. So there's a few things. I mean, it all ties together in a personal finance, like your philosophy and what you do in your family. But in my family, one of the things that I've been able to do for a long time is keep my expenses relatively low. So it does not cost me a lot to live. And I know that because I track it and I keep track of those numbers. We had a podcast episode that's coming out in just a few weeks where we talked about some practical ways that you can track your expenses and why you should do it. But I do that. So I track my expenses. So because I know it doesn't cost me so much to live, what I want to do is go generate cash flow outside with the income that I make actively. I want to go generate cash flow outside of my family that can now cover as much of all plus some the expenses. That's what I'm trying to do, right? Because if I've got cash flow outside that covers the expenses, my active income, what I do on a day in and day out 9 to 5 for work, can be a lot more liberal and fun. And you can take days off and you can go hang with the kids and you can do all the stuff that you actually want to do because, well, I'm not going to lose the house or lose the car because of that, right? And that drives a lot of discussion and communication with the people that we help with in Infinite Banking. A lot of people we talk about sometimes like to move to the opportunities, and they're not really addressing the problems and the interest that they've already got at home.
The liabilities.
Yeah, the liability, right?
Yeah.
A lot of people go, oh, I can go make 10% in this new fun, cool deal, and I'm going, yeah, but you're giving up 27% on the credit card that you can't pay off. Like we should tackle this before we move outside. Like we need to lower the expenses. We need to pay off that thing. Maybe you have it because you were in a bind. Cool, I understand. Let's pay that thing off. So now we're earning active income and it's not having to leave the family and go out somewhere else.
Right.
Now we've got different choices with it. We can pay off the new, there's all sorts of fun things, but it's really about cash flow. It's a long answer, but cash flow is king.
Yeah. And Navigate Your Ventures said that there. Cash flow is king. You'll hear people talk about cash is king. Dave Ramsey will say cash is king, and he's got a big banner that launches off his podcast and his radio show. Cash is king. Cash flow is king. Dave Ramsey actually believes that cash is king, and that's why you have tons of cash locked up in places you can't get to it. I do not believe that is king. I believe cash flow, like my brother said, is king. So I'm not going to put it in places that I have penalties and risks until I'm 59 and a half. I do not subscribe. I cannot endorse his message. So, okay, it's been about an hour. We go for an hour on Thursdays. Ladies and gents, we are going to miss you next Thursday. We will not have this hour. This coaching hour is postponed for 2 weeks. Join us again. If you have a few questions, jump on right now and finish up our discussion for this afternoon. But you can always keep it going on Infinite Bankers and that Facebook group, because we have a community there. And if you want to ask us a one-on-one question, but you're not ready for your free cash consultation yet, then I would suggest actually hitting us in Instagram. Hit us in Instagram with a question, real quick question, if you're not quite ready yet. That link in our bio will take you to everywhere you want to go. SaveAndSpendSystem.com is really step one until we get our new website. We're working on thebankingbros.com, a rehaul and rehash here. We're going to have a lot of great new content front-facing on the homepage for you. But until then, saveandspendsystem.com, click the link in our bio, or maybe even DM us on Instagram. It might be a good place for you. Navigate your ventures. Hey, we love you. We love you. Appreciate you being here today.
Yeah.
And any more questions, comments, or concerns from anybody? Jesse, close us out with a thought, a think long range thought. Our, what would you call him? The godfather of infinite banking here, the developer of the concept, R. Nelson Nash, had rules to that money game, becoming your own banker. Rule number 1 was think long range or think long term. Give us a little something there that we can take with us for 2 weeks, Jesse, because we're not going to be back for everybody live at this hour.
Yeah, I think that when people realize the profitability that banks have and that we can reacquire that for ourselves and the control, like we've been talking a lot about today, the profitability and the control of banking, when we can reacquire that for ourselves over our lifetime, to speak to that first principle from Nelson, again, in his book, Becoming Your Own Banker, there's so much money that we're bleeding out to banks that if we kept over our lifetime and then we were banking with that capital, there's no telling what that number is. Again, Jonah talked about, maybe the average American is spending $500,000 on cars over our lifetime. What if we could still buy the cars, keep the principal, and keep the interest that's going to banks? What if we could do both of those over our whole lifetime? And then I guess what's been on my mind recently is his second principle, which is don't be afraid to capitalize. I've been paying, this past week, I've been paying thousands of dollars, multiple thousands of dollars into 2 of my policies. So at the first half of the year, we pay into a good number of our policies. And at the last half of the year, we pay into a few other policies that we have. So I know that we're going to be pulling the trigger on some things later this year. So right now, I'm just in a capitalization phase. We are putting as many dollars as we can into our policies because we know, guaranteed, that they are going to create multiples of themselves over the long range. So that's what we're doing, and that's where I'm at, and that's what I would encourage everybody. Yes, think long range, and yes, capitalize for yourself.
If you don't know about that book that Jesse held up, we highly recommend you grab a copy. It's available in your town on a site called Amazon. I think they have a website wherever you live. Becoming Your Own Banker, 5th edition. That's R. Nelson Nash himself. His first name was Robert on the back of the book. And that is going to help you understand what this infinite banking concept is about. If you're going to use that term, you want to go to the source. Lots of people on the internet are using that term, not going to the source. We highly suggest you do. And then come see us for a conversation about how to do it in your life today. We call it the Save and Spend System. Okay, ladies and gents, that's all we've got for you, I think, this hour. And we'll see you in 2 weeks on Thursday, Eastern Time, noon, for another cash coaching hour with several of our coaches, most likely. But Jay-Do, Jonah, and Jesse signing off. We'll see you in 14 days.
You are now tuned to the banking bro. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.